Okay. All right. Let's see what we have. Okay, it's 9:01. I think we have quite a number, right, Kayla? So maybe we can get
that's fine.
started. All right. So good morning, everyone. My name is Gifty Ostrander. I welcome you to the workshop today. I'm a senior business advisor at the Stony Brook Small Business Development Center. And we want to thank our speaker, Kristina Hind, today. Kristina is a CPA. We appreciate you for doing this for us and for presenting the workshop. Kristina is back for a repeat of her wildly popular workshop, Bookkeeping Basics for Small Business Owners. She will share her tips for understanding bookkeeping, best practices, best basic business tax tips, as well as helping you make sense of your financial reports. So first, we'll give a little background about Kristina. Kristina, as I said earlier, is a CPA and the founder of Franklin Accounting Solutions. With over 15 years of experience, Kristina brings a unique set of skills to the table, priding herself on being not only knowledgeable in her craft, but approachable and lighthearted. Franklin Accounting offers comprehensive bookkeeping packages and are dedicated to providing their clients with clarity and understanding around the financial health of each of their businesses. We are all aware of the importance of keeping your books up to date, right? And managing your bookkeeping proactively. It helps you stay financially stable, compliant, and make better business decisions. We are joined this morning with as well with our admin staff here. We have Kayla. Kayla would be monitoring the chat for questions, and she'll be fielding all the inquiries you have. So I want to take a brief moment to talk about our services that we provide at the SBDC here. We provide free and confidential one-on-one business counseling for a wide variety of businesses, both startups and existing businesses. So if you have a business, you want to expand, you want to add more lines of services or products, by all means, see us. If it's a startup, it's just an idea you have and you want to explore if it's a good decision to move ahead and start a business, by all means, see us. Our door is wide open. We assist anyone at all that walks through our doors. So, as I said earlier, our assistance is very wide. We provide counseling in the areas of certification and procurement, marketing, access to capital, financial planning, financial projections, business planning, manufacturing, technology, government procurement, the list goes on and on and on. So we provide extensive services. If you need assistance, by all means, come and see us. We have international trade, disaster assistance, and much, much more. So by all means, feel free to call us, even if it's just a question you have. You don't have to necessarily be a client. You want to explore what we can help you with before you become a client, that's fine too. So call us with all your questions that you have. We will share information on how to make an appointment with us in the chat. So I said earlier, people will put their questions in the chat. Kristina, when do you want to take questions? As we go along or as at the end of the presentation, if you could please give us some kind of indication on how to do this.
I think at the end would be
Okay.
would be a good time to do it.
Right, less interruptions. I understand. Okay, so at the end of the presentation, we will have FAQs. Okay, and questions and answers, Q&As rather. Okay, so at this point, let me turn the presentation over to you, Kristina. Thank you once again for being here, and
Of course.
definitely take over. Thank you.
Okay, great. So hi everyone. My name is Kristina Hind. Like Gifty so kindly explained, I am a CPA and I have over 15 years of experience. So I do have a presentation for you, so I will share my screen now. Okay. All right. So I can't see you. So let me move you over before I do this so I could see your faces. All right. Okay. Can everyone see it?
Yeah.
Okay. All right. So I just came up with like ChatGPT helped me come up with the name Your Biz, Your Books, navigating the world of accounting. You gotta love AI, right? So basically, this is just a quick agenda. I'm going to go through an introduction, explain my background. We'll go over bookkeeping best practices, different technology that you can use to help manage your finances. I'll take you through financial statements, income statement, balance sheet, cash flow statement, what each of them means and how they interact with each other, different types of entities that you can form, and just the basics of tax planning. And then, like I said, we can do a conclusion with a Q&A at the end. So a little bit about me. So this is maybe my third or fourth time doing this presentation for the SBDC. And it's been a great experience. I truly love getting to present to all of you, and I've gotten to meet some people and actually have gotten some clients from doing these presentations. So it's been a great experience for me. And so basically I started my career in 2010 while I was in college, and I've been in many different roles. I did audit. I was worked for a tax firm. I worked at Northwell as manager of finance. I was at Hofstra for a little while. So I have many different experiences in different areas of accounting. And basically, I started to question like where I was going to go next. And at that point in time, I decided, I would like to help small business owners. I was working for a smaller tax firm at the time, and I really, truly loved that. And it's become my passion ever since. So I would say the last 3 or 4 years, I've been building my book of business, and I work directly one-on-one with small business owners just like yourself. I do their bookkeeping, their tax returns, and for some of them, some advisory as well. So basically, before we get into anything, the basic, like the just basics of what you need to know is your profits equal your revenue minus your expenses. And having a clear picture of your numbers is always going to help you increase your profits. Without understanding your numbers and exactly how much revenue you're bringing in, what your expenses are, you'll never be able to truly understand, okay, how much money am I keeping in my pocket? Now, working with small business owners for the last 4 years, I've really come to understand what their pain points are. And I would say the biggest thing that people struggle with is, how do I pay myself, right? So I have this business and I need to make money. How I'm making money, but I don't know how much to pay myself. When can I pay myself? And how much can I even pay myself? A lot of small business owners are scared to even touch the money because they're not sure of, can I afford it? So that's a big pain point for a lot of small businesses. And I say to all of them, the first thing that you really need to do is understand the inflows and outflows of your money of the business. And that starts with bookkeeping. So at the very bare bones, bookkeeping is basically the cornerstone, the foundation of your business. It's like trying to build a house without a foundation, pretty much. So, like I said, having a clear picture of your numbers is always going to help you increase your profits, because now you can decide, okay, do I need to be making more money? Can I cut my expenses anywhere? So basically, what is bookkeeping? Bookkeeping is the practice of organizing, maintaining, and categorizing a business's financial records. So money coming in needs a category, and money going out also needs a category. So you're basically going to go through all your financial transactions and code them to a different account category. And then once you're done doing that, at the end, you get a financial statement, an income statement. So what are the main components of bookkeeping? Recording all your financial transactions, processing your invoices and collecting payment, maintaining and reconciling your general ledger accounts, and preparing your financial statements. So bookkeeping best practices. Number one thing that I tell all small business owners right from the get-go, the most important thing that you would want to do right from the start, if you're brand new, if you don't even have a business yet, is to make sure you separate your business bank account from your personal bank account. So you want to keep all money coming in from the business going into that account and all expenses coming out of that account. This way you can keep track of what is business related much, much easier. That is going to help you not feel so convoluted, because when you have everything mixed together, then it's like, I don't even know what I'm making. I don't even know what's going out. It makes it much harder to keep track of everything. So I would say if you are at the beginning of your business or haven't even started yet, do that. Even if you don't have an LLC, which we'll get to in a moment, you can open up a separate personal account under your own social security number and treat it as if it is a business account. So keep it completely separate. So that's keeping everything separate. Then maintain your receipts using an effective filing system. So what does that mean? So basically, you want to keep your receipts. So the IRS requires that we maintain receipts for anything above $75. I would always recommend keeping every receipt, but that's what they're really going to want to see. So anything above $75 is transactionally, you'll want to keep. So a good filing system to use is you can just open, if you have Gmail, you can use a Google Drive, you can use Dropbox, and label it with the year. And then when you double click and go into the year, the month, and then the name of the vendor and the dollar amount. So this way you can just double click, exactly what receipt goes with which transactions. So that's a filing system. Now, my recommendation is to track your income and expenses at least on a monthly basis. So you want to be recording all of your transactions at least monthly and reviewing your financial statements at least once a month. someone like me, I probably do it every day. I'll take, at the top of the morning, I'll record my transactions, I'll review it. I mean, I think that's probably excessive, but at least monthly. So this way, everything's fresh in your mind. You know what everything is, and it's not so overwhelming, especially at the end of the year. If you haven't been keeping track all year, it could become stressful once, tax season comes and now you have to file a tax return and you feel like scrambled. So keeping track monthly, I would say, is the way to go. And then the last thing is to reconcile your bank balance to what you have recorded in your books to make sure that there's no errors. Most of the time, it's going to be like just a simple mistake, like something got recorded twice or something got left out. But sometimes you can find, fraud in there or something that you're questioning, like, I don't remember, purchasing that. So it's a good way of keeping track of your bank balance, making sure that you understand, where your money is going and that it's accurate. So tech stack. So when you own a business, keeping everything efficient makes things much easier. So popular bookkeeping software, if you're at the very beginning and you're trying to save on costs, there's always Excel. Then Wave Accounting, I believe, does have a free version. And then my favorite software is called Xero. It's called Xero. I think it is much, much simpler interface than QuickBooks Online. I know that QuickBooks Online is, they do great marketing and everybody knows them. But I actually think that Xero is a much simpler and easier to digest software than QuickBooks Online. So it's what I prefer to use. I use it with most of my clients. I do have some on QuickBooks Online, but the majority of my clients are on Xero. I will talk about the Excel template once we get through the rest of this and like how to set it up. And I actually do have a template that you could purchase. It's not mine personally, but it's one that I recommend to a lot of people who do want to DIY. It's relatively low cost and you get the access to the template forever. So I'll go back to that. And then for receipt management, like I just said, Google Drive, Dropbox, and then there is a software called HubDoc. So HubDoc is great because you can upload your receipts to the platform and then it will code it for you directly into Xero and it interacts with each other. And I believe it does work with QuickBooks Online as well. And then for payment collection and invoicing, this is really going to depend on your business. I don't think I have one client that has the same way of collecting payment. I'm currently working with 20 different businesses that I manage their books for, and not one of them has the same invoicing system. So there's a ton of different options out there. It's actually overwhelming how many there are, but these are just a few. So like if you are brick and mortar and you are selling products, retail, Square is a great one. It actually makes it pretty easy to record the revenue on the bookkeeping side. And then Stripe is also another great way to collect payment. That's what I currently use. And Stripe is amazing because it will automatically send invoice reminders. If you're a service provider, it will send reminders that payment is due. This way you don't have to be chasing any clients or anything like that. It's really great. And then HoneyBook is a CRM platform that's just, they house contracts in there. You can send your client their contract, and then it just automatically bills them at the end. So those are 3 great different tools you could use. So like I said, going back to the Excel template. So for the Excel template, if you're right at the beginning, I think it can be a great option instead of using Xero or QuickBooks Online. And the reason why I'm saying that is because it's easy to make a mistake and then have to go back and figure out how to fix it. It's easier to fix things in Excel. It's much more forgiving than a software like QuickBooks. So you can just use a very simple template. It would be like you would have at the top your date, your description of whatever you're purchasing, and the amount, and then the account category. So it would be 4 different columns. So like I said, date, description, amount, and account category. And you would just fill it in. You would go through your bank statement and you would say, okay, this is a business transaction, and you would fill in that information. And then at the end, you can do a subtotal of by category, or you could give that template to your accountant at the end of the year, and it would be much easier for them to work with. So this way, they can sort it by different category, if that's what, just simply for filing taxes. There is a DIY template that I have at the end of the presentation, and it's really nice because you can put everything, like I just said, into the template, and then it automatically creates a P&L for you. And then there is also deadline reminders of when estimates are due, and all sorts of goodies in there for tracking your profit and loss. Okay, so now the next thing I want to go through is understanding your financials. Just going to take a drink 1 second. So now that we've gone through like the basics of bookkeeping, how to track things, best practices, I wanted to go through what each financial statement looks like, what they mean, and how they interact with each other. So once you're done, so say now you're going through the month, you're tracking all your income and your expenses, you've got all your categories set up at the end of it, and say you're using that template that we were just talking about. This is what it's going to produce for you. So whether you're using QuickBooks Online, Xero, or that template, at the end, you're going to get these 3 statements, and each statement tells you a different thing. So to start off, the most simple one to explain would be the income statement. So your income statement shows you your total revenue, which is right here, your cost of goods sold or your direct costs. So say you're a service provider and you don't have products that you're selling, but you have staff that work directly with your clients, that would be a direct cost. So that would go in your cost of goods sold or your direct costs. And then, so revenue minus your direct cost is your gross profit. So that is what you're keeping in your pocket after paying for those revenue producing items. So this would be anything, cost of goods sold is anything that's revenue producing. So, and now you have your gross profit. And then under here are your operating expenses. So this would be any expense that is necessary and ordinary to run your business. So if you have a space that you're renting, you're paying for advertising, merchant fees, software, If you have a home office, that would also go in here. And then your total operating expenses is just a total of those costs. And then your net profit is your gross profit minus your operating expenses. And this is the money that you're keeping in your pocket. So that's income statement. Going over here to the balance sheet, your balance sheet provides you with a snapshot in time. So it's going to show you what your bank balance is on March 31st. So if that's going to say, okay, you had $15,000 in the bank on March 31st. I owed $5,000 to my credit card company on March 31st. And then the difference between your assets and your liabilities is your equity, your stake in your business. So the profit of your business adds to your equity. So you're always going to see your net profit on your balance sheet because it's increasing what your stake is in the business. So say you, so now an owner's draw is money that you're taking out of your business to pay yourself or like personal expenses that you've paid for out of the business. So that reduces your stake in the business. So that will always show as a negative amount. And then your total equity is $10,000. So it's like I said, that $15,000 minus the $5,000 is $10,000. So you have positive equity in your business. So it's kind of similar to like owning a house. You buy your house for $400,000, and probably like if you're on Long Island, now it's worth $800,000, and your equity in that house is $400,000 because you, like, say you just bought it. You have a mortgage, which is $400,000. Your equity in your home is worth $800,000. Your equity is $400,000. So that's similar here. So your assets minus your liability is your equity. Now, cash flow. So the cash flow statement can be sometimes a little bit hard to wrap your head around. It took me actually a really long time to fully understand a cash flow statement. And I'm doing this for 15 years, but it tells you where your cash is going. That's basically the gist of a cash flow statement. So it's going to say, okay, what's my beginning cash balance? So at March 1st, 2024, my cash balance was 0, pretend. Now, my business made $38,000 in the month. So I'm adding $38,000 of cash to my balance sheet. To my cash flow statement. I increased my credit card payable. So I used $5,000 of credit to purchase things instead of using cash. So that's an increase of $5,000 because I spent $5,000 here, which reduces my profit, but I actually didn't use cash to make those purchases. So I'm adding it back to my cash. And then cash from owner's contribution, that's pretending like I added money into the business. So I'm putting money in $1,000, and then I'm subtracting what I took out, the $29,000. So my ending cash balance is $15,000. So I think this is another important area to address is the difference between profit and cash. So a lot of times business owners expect, okay, I have profit of $38,000, but my bank account is only $10,000. How come it doesn't match? And that's because of those, it could be the personal draws that you're taking out of the business, or it could be because you're paying down debt and that doesn't count as an expense. So understanding how the three statements work together is important in running your business and understanding the financial health of your business. So entity types. When we're starting our businesses, it's important to pick the correct structure for your business. So there's three different types of entities that you can choose from. It would be a sole proprietorship, which would be just running your business under your social security number. And you can file a DBA. Basically, a DBA is doing business as. So you can pick a business name, you can file the DBA with your county, but you're still running the business under your social security number. So there's no legal protection at all. Your personal assets are also at risk when you're doing that. So I would always recommend at least filing an LLC. So that would be like the next step here, an LLC. So if you're a single member, it would just be, you would file your taxes on a Schedule C. But if you had two members, then you would have a partnership. So the partnership would file a separate tax return from your personal tax return. So an LLC is going to give you legal protection. So I'm not an attorney, so I can't really speak too much on it, but basically it gives you like a corporate veil. It protects your personal assets from the business, from the liability of the business. So that's another reason why it's really important to keep your business bank account separate from your personal bank account, because when you're commingling, that kind of pierces that corporate veil and now puts you at risk of your personal assets becoming, able to, someone being able to go after them. Now, the last entity that is a great option for saving taxes is S corporations. So S corporations are pass-through entities. So what does that mean? So it's basically a separate entity, but the profits of that entity are passed through to your personal tax return and subject to personal tax rates. Whereas a C corporation is subject to the corporate tax rates. It's different tax structure, and that entity would have to pay taxes on the profits. Whereas an S corporations don't pay taxes at all. All you have to pay in New York State is a franchise tax fee. If you're in the city, that's a different story. New York City does charge S corporations. There are no S corporations in New York City. So an S corporation, you could still have one, but you would have to pay a corporate tax to the city only. So in New York, like I said, S corporation, you pay a New York State franchise tax fee, which ranges based off of your revenue, the dollar amount of your revenue. In New York City, you have to pay a corporate tax. And then for the IRS, there is no tax at all. So the profit of that business flows to your personal tax return, and then you pay income taxes based off of your personal income tax rates. So the last slide I wanted to go through is something really important for business owners, especially ones just starting out, the basics of tax planning. So most likely, if you're brand new in business, then I would say running your business under an LLC is the simplest way to go. The S corporation is great once you've reached, I would say, between $50,000 in profit and $100,000 in profit. And the reason why is because when you own an S corporation, you are required to take a reasonable compensation and pay yourself payroll. So it gets a little bit more complicated. It's more, there's more costs involved with an S corporation. So I would always recommend talk to your accountant before making that election and going that route and get their advice first. But so my recommendation for new business owners is to go the LLC route, and then every month to set aside between 15% and 30% of your profit for taxes. So say you made $10,000 in the month, I would recommend putting $1,500 aside in a separate bank account for taxes. And the 15%, the reason why I say that is because your profit is subject to self-employment taxes. So that's a really important thing to know, because business owners kind of get caught up in that. Like, that could be something that hurts you big time at the end, because no matter what, you're paying that 15.3% on your tax, on your profit. And basically, self-employment taxes are Social Security and Medicare taxes. It's the equivalent for a small business owner. And the reason why I say to put away 30% is because you have to pay the income tax rate as well on top of the 15.3. So you're paying the 15.3 and then whatever your income tax bracket is. So that could range from 10% all the way up to 30%. So it would definitely be best to work closely with your tax accountant to make sure that you're capturing everything that you need to pay on a quarterly basis. So that's saving for taxes. Now, what are some ways to reduce your taxes? So there are called SEP IRAs and solo 401ks. So if you're a small business owner, I think retirement is something that can feel scary for small businesses, because it's like, how am I saving for retirement? I know that was a big question for myself. And SEP IRAs and solo 401ks are great because you can save up to 25% of your profit in this account, and it's a deduction for the business, so it reduces the profit of the business, and now you're saving for taxes, and you're basically deferring your tax until you take the money out at that time. So that's a great way to save money for retirement and then also save on taxes. And something that's not on here on this slide is the home office deduction and mileage. So if you're running your business out of your house, the home office deduction is a great tool for you. And if you're driving a lot for business, the mileage deduction is also. So for every business mile that you drive, you can take 70 cents as a deduction, and it adds up a lot. It adds up very quickly, and it's a big tax savings for small business owners. And then the home office deduction is basically if you have a home office in your home, you can take a percentage of your expenses, your home expenses. So your real estate taxes, your mortgage interest, your utility bill, landscaping bill, internet, all of that can be deducted on your tax return. So say your home office makes up 10% of your entire house, you would take 10% of all those expenses as a deduction. And then, like I mentioned, the S election is a great tool because it helps you save on that self-employment tax that I was talking about earlier. So just really quickly, to make it as simple as possible, the profit of your business is subject to the self-employment tax, which is at a minimum 15.3%. But S corporations do not pay that tax on the profit. So say you had $10,000 in profit, you're going to owe $1,500 in self-employment taxes. That S corporation is not going to owe that $1,500. But like I mentioned earlier, that's why you're required to take a salary with your S corporation, and the IRS wants to see that you're taking that salary. So you need to take what's called reasonable compensation, and it's a conversation. A lot of tax planning goes involved in that, and understanding what that number is. So, but just to know, that's how you save money on an S corporation. You're saving it on the self-employment taxes, and once you reach that $50,000 to $100,000 mark, that's when you'd want to start having that conversation with your tax accountant. So questions and resources. So we're at the end of the presentation, so I'm happy to take some questions. And then here's just a list of resources for you. How to file an LLC, where to apply for an EIN, different payroll providers. I have that DIY bookkeeping template if you'd like to get that. There's a link right here. Recommended banks. So my favorite is actually Chase. I think they have a great, their platform is great, and it also connects really well with all the accounting softwares. But Relay is a great one, and that helps with saving money in different buckets. I could talk about this for just an hour about Relay. And Wells Fargo also has a great connection to the accounting platforms. So any questions that you will have, I'm ready for you.
We had a couple questions in the chat. Earlier in the presentation, someone asked, what do you think of PayPal for invoicing?
For invoicing, I don't have any experience with a client using PayPal for invoicing, but I do love PayPal for paying contractors, actually. So say you had a contractor that you hired, if you set up a PayPal for business and they also have a PayPal, it's a great way of avoiding having to file 1099 at the end of the year, because PayPal will handle the 1099 filing. But I can't really speak too much on their invoicing platform. I don't have too much experience with that.
Okay, and then we have another one here. Someone said, on the home office deduction, do you have to pay for your utilities, rent, internet, etc. through your business accounts in order to qualify? Or can you take the deduction if you're paying through personal channels?
Yeah, you can. So I actually would recommend you pay for it personally and then have the business reimburse you for those expenses. And I believe I saw it pop up how to calculate the deduction. So say you have a room in your house that you're using solely for business, it's your office. You would take the square feet of that space divided by the total square feet of your home, and that would be the percentage to use for the expenses. So you take that percent times the total expense. So say your real estate taxes, for instance, say your real estate taxes are $10,000 a year and your home office is 10% of your home, you would deduct $1,000 on your business as an expense.
Okay, thank you. And then someone asked, what is owner's contribution of $1,000 for the balance sheet example coming from? Is it from the money the business just earned or their separate cash?
Let me go back to that slide. Okay. So it was kind of just like an example of, so the $1,000, it would, can you all see my screen? I just want to make sure you still can see it.
I think so. Let me see.
Are you able to see the slides?
I see you
No.
right now,
No, just your
but
face.
yeah,
Okay, can't see the slides. Let me do that. Okay.
there
Now,
you go.
can you? Okay. So the $1,000, so let's try to conceptualize it. So if you're looking at your bank statement, right? And you have a deposit of $1,000 come in to the bank, and you're like, okay, that was my personal money that I put into the account. You're gonna categorize that money as a contribution, an owner's contribution. So when you run your income statement, that's not going to show up as revenue here. It's not going to be on your income statement at all. It will show up on your balance sheet as an owner's contribution because it's a balance sheet item. So it's right here, this owner's contribution. So if we took a step back and visualized, you would have your line, it would show owner's contribution for the $1,000. It would flow directly to your balance sheet. You're not going to see it on the income statement. It doesn't impact your profit and loss statement at all because it's personal money. And it's going to add to your equity. It increases your equity in the business because you're adding money to the business to operate. So it's just a direct hit on your equity. And then you see it here on your cash flow statement because you're adding cash to the business. So it's $1,000 in cash that you're adding to your business to operate. Does that make sense? To whoever asked the question, I just want to make sure. Okay, great.
And then someone asked, why avoid Venmo to accept payments?
Venmo is basically the same thing as intermingling your business account and your personal account. So Venmo, I know they have Venmo for business now, but it actually still all commingled together. And that is an example of potentially piercing your corporate veil. And then if you hired a bookkeeper, it makes it much harder for them to keep track of your transactions. But basically, I would say the reason why is if you used it as a one-off and it was once in a while you used Venmo to pay somebody or no, like you had a client come in and they're like, the only way I can pay you is Venmo. And it was just like a one-off. I'd say it's fine, but I wouldn't say using Venmo as your only source of collecting your revenue is a good way to keep track of everything because of the commingling. You can easily transfer those funds to your personal, and then how do you know how much money you actually made? It's a little bit harder to track.
And then we have, how much should we expect to pay a CPA for bookkeeping? And is it much different for a single member versus a two member? I'm considering a single member LLC or putting my husband as a partner.
So the fees are really gonna depend on who you're working with, where they are in the country. There's so many different variables there that it's kind of hard to tell you exactly what to expect, but I could tell you from my business what you could expect from us. So for just standard, our pricing starts at $400 a month, and it will increase or decrease depending on a couple of variables. So it would be based off of how many bank accounts you have, how many credit cards you have, not necessarily based off of whether or not it's a partnership or not, especially if it's your husband that's your partner. I think it's basically almost like you're having a single member LLC. But yeah, it's going to depend on the complexities of your business and how many transactions you have, what a bookkeeper is going to charge you.
Okay, and then someone asked, I'm just looking, someone asked, as for taxes, you mentioned having a separate account for taxes. Are you suggesting opening two business bank accounts?
Yeah, so I actually suggest opening up a high yield savings account for saving for taxes. And the reason is because the money adds up pretty quickly, and why not earn some interest on that money while it's sitting there? So yes, I would open an operating account where you run all your expenses through that operating account, and then a separate savings account or a high yield savings account for your taxes to save for taxes. So this way the money is just out of the operating account, completely separate, and it's just sitting there ready to pay taxes at the end.
Thank you. And then someone asked, what recommendations for properly tracking employees that are paid in cash? The business is paying the gross amount per pay period. Are they subcontractors?
Um, for paying them in cash, I actually would recommend, if you could not to pay them in cash, that I would say the easiest way to pay a contractor would be through either PayPal or through an ACH direct debit, even Zelle if you're able to do it through Zelle. I would say that would be the easiest way to keep track of paying them, and also having to issue 1099s at the end. But if that's not an option and you have to pay through cash, then just adding that transaction to your template. So say you had an Excel sheet, you're not using an accounting platform, just manually typing, okay, on this date, so say it's today, May 21st, I paid John Smith $1,000, and the category would be contractor. So this way okay, I paid at the end of the year, I paid John Smith $20,000, and I have to issue him a 1099 at the end.
Thank you. And then someone asked, can you become an LLC if the business is sole proprietorship? How long does it take? And then she said, I will be selling to nonprofits. They don't pay sales tax. As far as I know, the business doesn't have to pay those taxes. How does that affect taxes at the end of the year?
Okay, let me take the first question. So yes, you can. So sole proprietorship is just basically your business is being run under your social security number. So yes, you can definitely form an LLC. An LLC, it depends on whether or not it's a professional LLC or not, but just a normal LLC, I would say it takes a couple of weeks. So if you did it yourself, if you go on the Secretary of State website, I think it might take like maybe 4 weeks. But you do have to post twice in like an article that the business has been formed. So me personally, I always recommend just hiring somebody to do it, whether it's like LegalZoom, or I actually do have a contact that I could refer everyone to if they want to form an LLC. I have two contacts that I could pass along. But yes, it takes, I would say, anywhere between 4 to 8 weeks. And then the second part of the question, can you read that part again?
Yeah, of course. She said, I will be selling to nonprofits. They don't pay sales tax, as far as I know. The business doesn't have to pay those taxes. How does this affect taxes at the end of the year? Anything I should know? It seems too simple.
Okay. So that the fact that you're selling to a nonprofit, that doesn't impact really too much your tax obligations. The profit of your business is still going to be subject to the self-employment taxes like we spoke about, and the income taxes. So I would still put aside the 15 to 30% a month of your profit for tax filing.
Okay, and then looking, another business owner said he pays himself and his wife a paycheck, but they don't cash it. He said this helps. I don't understand this. Is there any truth to this?
He pays himself, but they don't cash them. They don't actually take the money out.
Jen, can you provide any more information on that? You can unmute and speak if you'd like.
Yes, so I didn't really understand it myself. It's a business himself and his wife own. It's a pizza place. So he said they basically pay themselves a check. I don't know if it's just on paper, but they don't cash the check, and somehow this helps with taxes or something. I didn't really understand the thought
It
process.
sounds like, and without really knowing the entity structure of the pizza place or any really additional information, but it sounds like, if it was my guess, that their accountant is doing what's called like after the fact payroll and paying the taxes through payroll. To help avoid any underpayment penalties or anything like that, and kind of just saying, okay, they may have been paying personal expenses through the business, and they're just declaring a salary at the end to pay those taxes in. That's what I'm thinking is going on. But it's hard to know exactly.
Right. Thank you.
Yep, no problem.
And then another question, is it difficult to change from old to an election? Expensive?
I'm thinking what they mean is it difficult to make the S election? Is that what you mean? Whoever said that question?
Yes.
Okay. So no, it's not difficult. So it's called you have to file a form. It's called a 2553 with the IRS. It's not a hard form to fill out, but the IRS, I'll tread lightly here, they are just really slow in processing things. So you have to keep on top of them. So you have to fill out a 2553 for the IRS and send that to them. And then in New York specifically, you have to fill out what's called a CT6. So both forms have to be filled out, and they have to be done within 3.5 months. So for instance, if you formed your business on January 1st, or you want the S election to go into effect for, let's pretend it's 2027. So you want the S election to go into effect on January 1st, 2027. You have to file that form by March 15th of 2027 for it to be on time. And then there are ways to get around it. You can do a late election, but if you're going that route, I would recommend working with an accountant. If you're filing it on time, it's rather simple and you could do it yourself. But if it's late, I wouldn't recommend doing it yourself. I'd say have the accountant do it.
Okay, and then someone asked, how often do we have to file taxes? Sales tax in New York are per trimester, and then when do we pay the self-employment taxes?
Okay, so the self-employment tax and the income taxes would be one payment, and you need to pay them quarterly. So you can pay them online. It would be irs.gov/payments. I'll type that in the chat. So irs.gov/payment or payments. And you have to pay quarterly taxes on these dates. So it's 4/15, 6/15, 9/15, and 1/15. So the IRS is going to expect a payment to your quarterly estimates on those dates. That's for the IRS, and New York State also follows the same schedule. And New York State would be, let me just, while I'm on here, I'll Google it quick, the link for you all. So it's the New York State Department of Tax and Finance. And for them, you need to create an online account to make the payment. It came out as online services home. So with the IRS, it's easy. All you have to do is enter your social security number, your prior year tax return information to verify your identity, and you don't need to create an account at all. And you could pay from your bank account or with a credit card. For New York State, it's also easy to make the payment, but you have to create an account first. So you create the account and then you make the payment online. So let's take an example really quick. So say you made $10,000 in the quarter in Q1. So Q1 would be January, February, March, and you want to pay 15%. You would pay $1,500 to the IRS, and then if you're all in New York, I recommend paying like between 5 and 6% to New York. So that would be, another $500 to New York. So a total of $2,000. So $1,500 for 15% to the IRS, and $500 for 5% to New York. And that's just for the state. I don't know if anyone here is in the city, but that's a whole nother conversation with the city too.
So I have a quick question on that. So these are estimated taxes you're paying, and at the end of the year, if you are paid, is there a penalty, or if you've overpaid, you get a refund? How does it work?
Yeah. So the IRS expects us to pay our taxes throughout the year. So as business owners, specifically as LLCs, the way we do that is through quarterly estimated taxes. If you don't pay quarterly, they will hit you with a penalty. It's called the underpayment penalty. And if you overpay, yes, you will get that money back. So it's similar to, paying your taxes through withholding, withholding through your paycheck.
Okay. I have one more question, but I wanted Kayla to finish with.
Okay, and then someone asked,
Yes.
let me see, what other reporting is required for sales tax?
So for sales tax, in New York, it depends on the county that you're in. But you have to keep track of your total sales in the county by county, and you're going to file that. That could be filed online as well. And with reporting, I would say say you got audited by New York State for sales tax, what they're going to look for is a sales journal. So they're going to ask you to pull all your sales and where that sale occurred. So you're going to need to have that data, and like say you were using a platform like Square, it makes it easy because all of that is in there already. And you could just pull the report and have it readily available to provide to them. But they're going to want to know the date of the sale, where it was sold to, and how much the sale was for, and then how much you collected in sales tax, so that they can match what was remitted to the state.
Okay, thank you. And I'm just looking. Someone asked, is Form ST12 still something that is filled out for New York State? I think this is just for sales tax, but I'm not sure. Is this filled out in January? One time, I'm new to the state and haven't yet filled out my LLC here.
Right. Let me just look up what ST12 is really quick. I'll be honest, if I'm not sure the form number, but for sales taxes, we file them every quarter. So once you say you fill out your New York State sales tax certificate, that year they're going to require you to file sales tax returns every quarter, and it's not the same quarters as what I just put in the chat. So this is sales tax quarters. So it would be February, so 220, and they love to do New York State does things on off quarters for sales tax, so I have to like really use my brain to remember all the quarters. So it would be December, January, February. No, sorry. Yeah, no, November, December, January. Yeah, November, December, January, and then February, March. Let me just look it up really quick just to make sure I give you the exact. So sales tax quarters in New York State. Okay, March 20th. That's right. So March 20th is the first quarter. Then it's June 20th and June, July, August 9/20, and then 12/20 is when sales tax is due. So say your first year in and you filed everything on time and you had like low sales that you really didn't collect too much sales tax, they may adjust you and tell you, okay, you're going to be an annual filer now, but you're not an annual filer until the state tells you you're an annual filer. So for sales tax, you're required to file every quarter.
Okay, thank you. And then someone asked, self-employment tax is based on profit or money that came in the business account?
It's based off of your profit.
Okay, great. And then this isn't a question. I don't know if maybe you want to verify this. Someone said, if you have an equipment heavy business, you want an LLC in order to write off the equipment for the next 3 years, but you can elect to file your taxes as an S corp in order to incur the 15% personal tax rate. If you just formed your LLC, you have 2.5 months to file the requisite forms that Christine referenced. And then he said, I'm sorry, in order to avoid the 15% personal tax rate.
Right. If you have an equipment heavy business, you want LLC in order to write off the equipment for the next 3 years, but you can elect to file your taxes. Yeah, it sounds like he's just explaining something. Yeah, so right, I agree with him. the S corporation is going to, so S corporations do not pay self-employment taxes. So you will not pay the 15.3% on the profit of the business. But that being said, like I mentioned in the presentation, the IRS does require you to take a salary in your business in an S corporation. So you are still required to have a salary, which is then subject to Social Security and Medicare taxes. But yes, I do agree with what he said, especially if you have an equipment, like if you have a lot of equipment, then I would form an LLC, and you can still write off the equipment and depreciate that equipment under an LLC. You don't have to form an S corporation to do that. So the LLC can own the equipment. You can depreciate that equipment and take that expense. And most likely you could probably write off the whole amount in the first year. But that would be something you would work with the tax accountant.
Okay, thank you. And then someone asked, what if you sell something on Etsy as an example and they already take out the sales tax? Do I still have to pay sales tax for that item?
I believe Etsy is one of the platforms that's required to remit sales tax on your behalf. So I would just confirm that the taxes are being remitted. And if they are, then no, you don't include those sales. And so say you were using Etsy and then also selling products in person, whatever is being sold on Etsy is not included in the sales tax filing.
And then someone said, I have an accountant who takes care of my business, but I want to take care of P&L by project to improve and track my income. What app or system do you recommend?
What type of business is it?
And feel
To
free to
whoever.
speak if you don't want to, if it's easier for you instead of typing it out. Home improvement.
Home improvement. So there is a system, it's called Jobber is one that's great for tracking by project. And then let me look it up, the one that I'm thinking about. That is, it's very robust system. Jobber, it came up. The one that I'm thinking of, like literally just came out of my brain. I can get back to him on that platform, but I know Jobber is a good one too. I'll have to look it up. I forget the name of the one that I'm thinking of in my head.
Okay, thank you. And then someone asked, just to clarify, can you opt to change to an S election at any time, or does it have to be within a certain period after starting your business? We started our business 2 years ago.
No, you can make the S election at any point in time. But so you just have to make it within, so say you 6 years down the line, right? And you're like, okay, we're ready to be an S Corp. To file it timely, you have to file it by March 15th for it to go into effect by January 1st. But there always is the option of filing it late. So late meaning like within that year. So if you don't file it by March 15th, then you file it by September 15th. You can do that. but you need a reasonable cause to do that. And that's why I said it's best to work with an accountant, because they have the wording and the appropriate wording and how to handle it. But no, there is no deadline. You can do it 15 years down the line.
Okay, thank you. And then someone asked, I'm a food producer and I read that if I purchase bottles to put my product in, I can get a tax exempt form to use when I buy the bottles. Is this correct? What other items can or should I get a form like that?
A food producer, right? So you're selling products which are then subject to sales tax. So you're gonna file for a sales tax certificate. So this way you can buy the products that you're using in your final product at wholesale. So you would go to the wholesaler, you'd provide them with the sales tax certificate, and then they would sell you their product at just wholesale costs instead of at retail costs. So that would be whatever you're putting into your final product, you should be able to buy at wholesale.
And then someone just said, thank you for this wonderful information. Does your template carry over to Google Sheets?
Yes, it's in Google Sheets.
Okay,
Yep.
great. Thank you. And then someone asked, my husband and I own a food business, bar, nightclub. We do not use tax exempt for any supplies. Would it be smarter to do so?
On a food business, bar, and nightclub, we do use tax exempt for. Oh, we do not use tax exempt for any supplies. Yeah, because what you're selling is subject to sales tax. So you definitely want to, if you should have a sales tax certificate already. So when you're buying your supplies, I would definitely buy them from a wholesaler for sure. Yeah. So this way you're not paying sales tax. So basically, like the way sales tax works, just to explain, sales tax, the person that is required to pay sales tax is the one at the end of the cycle of the product. So when you're preparing the food that you're making and selling it to your client or your customer, they're the ones that is required to pay the sales tax at the end. So for Jen, who asked that question, you are able to purchase the product that you're selling at wholesale costs. So this way you don't have to pay the sales tax on that. It's the end user, the final user of the product that has to pay the sales tax.
And it looks like the last question is, can we deduct gas that we put in our personal vehicle, or do we just track and deduct the miles?
So you can deduct the gas. So there's two different ways of tracking auto expenses. It's called the direct cost versus the mileage cost. The mileage way of doing things is actually ends up always being a higher deduction. So that's why I always recommend my clients track their miles, because the 70 cents takes into account the wear and tear of your car as well. So what you're talking about deducting the gas is using the direct method, which then you would also have to still track miles, because you'd have to use just the business percentage. So my recommendation is track the miles, give the total miles to your accountant, and they'll tell you what your deduction is.
We actually had two more questions come in. Someone said, if I sell art from New York, am I required to collect sales tax only from a buyer from New York also, or is it any state?
Sales tax is dependent on who you're selling to. So if your customer is, say you're in New York, you're selling the product from New York, and your customer is in California, the tax is going to be collected in California. So with sales tax, it's a little bit more complicated. You have to track their Nexus. It's called Nexus, comes into play. So Nexus, so say you live in New York, you're selling products online, and your products are going all over the country, you have to track the Nexus in each state. So, which is basically each state is different, which is what makes sales tax complicated. But they will tell you, okay, once you hit, say, $100,000 in sales and you've sold 1,000 items, now you have to start paying sales tax in this state. So you have to, that's what's good about like Shopify and Etsy. They do it for you. They track the Nexus for you. And Etsy is required to remit the sales taxes on your behalf. Some platforms are not required. But yeah, so basically, long story short, sales tax is dependent on where the product is going to, where it lands.
And
Okay.
then someone just asked, can you please clarify, do you have to repeat electing your LLC as an S Corp each year? Or once you choose that status, does it stay that way?
Yeah, so once you make the S election, you're an S Corp forever until you terminate it. But if you terminate the S election, you're not allowed to make it again for another 5 years. So that's why I always tell clients to be careful when making this election and to do it at the right time. But yeah, so once you make that election, then you're an S Corp forever.
Perfect.
And then someone asked, to claim mileage, do we need to keep a mileage log? What about vehicle maintenance?
Yes, so the IRS will require you to have a log, and on that log, you need to have the date, where you drove to, the business purpose, and the total miles. And that template that I was telling you all about actually has a mileage tracker included in the template. But if you don't need a bookkeeping template and say you're using a platform already like QuickBooks, there's a great app called Mile IQ, and I'll throw it in the chat, that makes tracking easy. So you open up the app when you're driving, you swipe that this is a business, you're driving for a business reason, you put in the reason, and then at the end of the month or at the end of the year, it will generate a report for you that is that will hold up in an IRS audit if that were to ever happen. And then for vehicle maintenance, the mileage deduction, the 70 cents, includes that, like, accounts for vehicle maintenance. But it's a great deduction. It adds up really fast because it's 70 cents for every mile that you drive.
Okay. At the end of the
That's it
question?
on the questions.
Okay. Thank you, Kristina. It's been
Of course.
wonderful. A lot of information. I got a lot of value from this, and I'm sure everyone else did. So I'm really glad you came out to share.
Yeah, I know every time is a little bit different because everybody's questions are different, and there's so much to cover. We can do
You're
like
getting
7
all
of
these
these.
emojis on the screen. Thank you, thank you, thank you. They love your presentation. It's been wonderful. After the workshop closes out, you'll receive a survey. I'm not sure if Kayla has put it out there in the chat. Please take a moment to fill it out. It's very, very important. It gives us feedback. We want to do more of this in the future, so we want your feedback to help us know what you need, what questions you need answered, and what to present. It helps us. The feedback is really important. And I think Kayla said the recording would be made available, right?
Yes.
In the next week or two. So you can always get a copy of that on our website. Thank you, everyone, for attending the workshop. I appreciate it. Thank you, Kristina, for donating your time.
Of
Very
course.
useful.
I just put the DIY template in the chat as well, the link to that, if anyone is interested in it.
Perfect.
Hey, thank you so much.
Thank you.